Hello, everyone. Hey, this is Scott Rulon, and I am so glad to be back. If you might recall, you know that I'm in the accounting profession and have thankfully finished my 33rd tax season. How exciting! Well, today I want to talk a little bit about how to build assets in 4 steps. So basically, there are 4 different types of buckets of money. I also want to let you know that any information I give here today is purely for educational purposes and is not meant to be financial advice. If you want financial advice, you need to go see a financial advisor and talk to them about it. At any rate, let's get on with the show. So how to build assets in 4 steps. Literally, the 4 buckets of money. So, as you probably know, I have been in the accounting profession for 33 years and have seen lots and lots of clients over time. And, as I do their tax returns, I see those that are successful and those that are not. So, how do you build 4 buckets of money? Well, I should absolutely disclose that you should bring your questions to a competent professional before making any decisions just based on this blog. Please be aware that I have included certain business links on which a commission is earned. These commissions help support my continued writing of this blog. I do not know if you'd be interested, but I can tell you some common traits that I see year in and year out. Smart millionaires or well-versed monetary people always know how and where they are spending their money. In fact, they always have a way to raise cash should an interesting opportunity pass their way. Interested? Well, let's get on with it. The 4 buckets of money. Bucket number 1, the taxable income bucket. Sometimes I think this bucket is the worst of all because for the most part, it is not only the highest tax bucket, but it always the bucket with the least amount of leverage. Leverage, you say? What's that? In this case, it's trading time for money. You can work a certain number of hours and they pay you a certain amount of money. The leverage here is 1-to-1. You're trading work for dollars. You expend work and get paid hourly, weekly, or monthly. The only issue here is there's only so much of you to go around. Unless you are in the entertainment business like sports or acting, you will never get paid a disproportionate amount of money for the work you put in. Other items in the taxable bucket are interest, dividends, and commissions. Interest and dividends are certainly attractive because they are passive. Unfortunately, they take a large sum of money to receive any kind of livable income. Let me give you an example here. Let's say you had $100,000 to invest and could actually get 5%. You would receive $5,000 a year in income in gross. Unfortunately, once Uncle Sam and his partner, the state government, take their pieces of the interest earned, you'd probably only be left with $3,750 net of taxes, lowering your nominal return after taxes to a mere 3.75%. If you are smart, you have put some tax money aside to cover the taxes so that you do not have to interrupt the compounding of interest. In other words, would you like your interest to be compounded on the $105,000 or the $103,750? I'm guessing you picked the bigger number. Year 2, you would receive $5,250 in interest versus $39,3750 on the $103,750. The other issue here is if you choose not to pay taxes from your investment, your tax bill will be increasing each year and lowering the amount of money that you have to pay living expenses. Double bummer. So what do? Hey, the government had a great idea. Let's call that the tax postponed bucket. Bucket number 2, the tax postponed bucket. What is that, you ask? Well, have you ever heard of an IRA, 401k, 403b, or a 457 plan? These are all tax postponed buckets. You may have also heard of them as compensation deferral or deferred comp plans. They are not tax-free, mind you, but they are tax deferred. And you're going, Scott, wow, that sounds great. Reduce my taxes today and pay taxes later on. The part of what the government does not really tell you is that one day you'll be taxed on your deferrals plus any earnings you have accumulated. So say your deferred earnings is $100,000. Let's forward to age 72 when they force you to take out your deferrals. They tax you on the whole lump sum or pieces of it that you take out over time. By the way, if you do not take your required minimum distributions, the government charges you a hefty penalty of 50% if you do not take out what you are required to do. Before you boil over and get mad and say, Scott, there must be a better way, let's explore bucket number 3, the partial tax bucket. Bucket number 3, the partial tax bucket. Hey, I'm liking the sound of that already. Sign me up, Scotty. Generally, the partial tax bucket has to do with rental real estate. Makers, the modified cash recovery system, also known as depreciation, can sometimes make rental properties cash flow negative while producing positive cash flow. A good attribute when you're considering taxability of your rents. The tough thing with rental real estate is the leverage it requires. Leverage here is another name for debt. You have to use your rents to pay that debt. And if the space is not rented, you still have to pay the debt. So you may still be out of money, especially if you don't have renters. So although the partial tax bucket sounds interesting, it certainly does require a large amount of debt to really make it work. That brings us to bucket number 4, the tax-free bucket. Well, the tax-free bucket, there are a couple ways to create the tax-free bucket. One, by creating a Roth account, which can create tax-free distributions from your original contributions and your earnings, if and only if you're over 59.5 years of age. The second way is to create tax-free as policy loans from a life insurance contract. Can I hear the groans here? I know you thought life insurance only works if you die. Not true. In fact, it is a source of money that I used to pay for my son's college. Fantastic. So what I would advise each one of you to do is to review the 4 buckets of income in your life. Each of us has some of the buckets in our life, but many of us do not have all of them. So what are you missing? If you have any questions, feel free to contact me, Scott at scottrulon.com. Hey, I've also included here links to some additional blogs. And down at the bottom, I have step-by-step instructions to build an online business. So if you want to take a look at those, you can go to my blog, which is called myfinancialfair.com, and read more about it. Hey, and before you leave me here, don't forget to hit the bell icon so you can receive future videos. I'm so excited for you to come here, and I look forward to blogging or vlogging with you in the future. Y'all take care now.